Hello and welcome to tradingfloor.com. About half of the European companies that have reported earnings so far have disappointed, which is in stark contrast to their American counterparts, which have surprised to the upside. Only about 10% have reported so far, so it's still early days. Nevertheless, today we have Christian Blobbier, Chief Equity Strategist of Saxo Bank, with us to talk about this sluggish tendency. Welcome, Christian. Why are European companies still posting disappointing earnings and underperforming their US counterparts?
I think in terms of understanding what's going on on the European company side, you need to sort of distinguish between those who are mostly domestic sales exposed and those who are more internationally exposed. If you look at the German companies that are virtually global exposed, like Siemens, their sales is up, their expectation for 2011 was revised higher, the earnings is up, but on the other hand you have companies that are mostly or solely exposed towards the Eurozone, and the sluggish economic growth and the sluggish retail sales within the Eurozone sort of clearly indicates that these companies will have difficult times in having growth in earnings for a while.
But in light of the strong economic growth in Germany, which is Europe's largest economy, having grown 3.6% in 2010, when can we expect a brighter European earnings outlook for these companies?
I think also, if you look at the German companies that are solely or mostly exposed towards Germany, they're doing quite brilliant. DAX was the high performer of the European indices last year with 17% in gain in price implied return, while on the other hand you have an index like IBEX, the Spanish IBEX, which was down pretty much by 10%. So the equity world in Europe depends very much upon whether it's solely domestic exposed or also a sort of a general global exposure on the one hand. On the other hand, if it is domestically exposed, which country is it most exposed to? If it's exposed to Germany, look at the Polish companies that have most of their exports into Germany. They had strong performance. But the companies mostly exposed towards Southern European countries that are sort of known for being in trouble, they had less development and less performance. So in terms of looking for 2011, look for those companies which are global exposed in Europe. They will do fine, and most likely those who are domestically exposed towards especially those countries which are known to be in trouble will have less performance.
Okay. So which sectors are likely to show first signs of bucking this tendency?
I think in Europe, as in the US, we are sort of in almost a pro-cyclical cycle where markets are adding on risk, and the sectors they're looking for is like basic materials, technology, energy. Financials has also done very, very well here in the beginning of the year, but it's sort of a classic pro-cyclical. We expect in around half year, there will be a rotation into sort of mid-cyclical cycles, more like going into industrials perhaps, healthcare, to some extent still energy. Energy is driven obviously by, amongst other things, oil price, and the oil price seems to continue to higher, at least for now. And industrials will short-term get squeezed on these higher input prices, but usually you have a rotation towards industrials in the mid-cyclicals, and we expect this to sort of come out in play in mid-2011.
And looking ahead to next week, which European companies should we watch out for?
I think in the basic materials sector, I would look out for ArcelorMittal, which is more a global company but still listed in European stock exchanges. Rio Tinto as well. In financial sector, I would actually look for a company like Danske Bank, which is the major bank in Denmark. I think there's a surprise to the upside there. Also ThyssenKrupp from Germany, the elevator, amongst other things, producer. These are the companies I would look for.
Thanks for this insight, Christian. Don't forget that you can follow more of his insights on tradingfloor.com.